Stop whatever you are doing. You need to pull up the charts right now. We are tracking a stock that is absolutely shattering records, surging hundreds of percent this year alone. It's the next-generation nuclear energy developer, Oklo. The momentum is simply unbelievable. If you look back just 12 months, this stock has exploded, soaring anywhere from over 1,400% to nearly 1,800%. That is a staggering jump for any company, let alone one in the energy sector. Year to date, the shares have gained somewhere around 380% to nearly 500%. In the last month alone, the stock has jumped around 60% to nearly 90%. In a single week recently, we saw the price leap about 45%. This run is fueled by pure momentum, with the stock recently earning a nearly perfect score of 99.70 in one major ranking. Today, we break down the massive forces driving this rocket ship, the huge political momentum behind it, and the critical financial warnings that you must know before chasing this crazy price action. The single biggest factor driving this entire nuclear boom is the undeniable truth that the artificial intelligence revolution is running straight into an energy wall. AI requires massive computational power. Those supersized data centers, the engine rooms of the AI world, have an insatiable thirst for electricity. The numbers are shocking. A typical data center built for AI currently burns through as much power as 100,000 homes. But the next-generation hyperscale facilities being planned today, they will demand 20 times that much power. This isn't a future problem. Global electricity usage just for data centers is expected to more than double by 2026. That increase alone is equal to the total power usage of an entire industrialized country like Japan. The crisis is hitting America hard. The U.S. energy grid simply does not have enough extra capacity to meet the power demand projected from domestic data centers over the next 5 years. We are already seeing places globally halting data center projects because they simply don't have the necessary power infrastructure. This desperate need for constant, reliable power is why nuclear energy is suddenly the ultimate solution. AI demands clean, uninterrupted power, 24 hours a day, 7 days a week. Oklo's stock performance is being fueled by clear political action, validating its mission and accelerating its commercial path. We recently saw the huge international agreement between the US and the UK, known as the Atlantic Partnership for Advanced Nuclear Energy. The White House explicitly said this landmark deal is designed to speed up the deployment of next-generation nuclear reactors in both countries. This strong political support has been building all year. The president issued executive orders aimed at turbocharging U.S. nuclear production, directly citing the global race for AI dominance and national security concerns. This government push sets the stage for Oklo to get the necessary regulatory approvals for building new plants. Lower interest rates also play a role. When the Federal Reserve recently announced a rate cut, that contributed to the excitement. Lower rates make it cheaper for companies like Oklo to finance the massive, costly projects they need to build. Oklo has a unique business blueprint. They are building a vertically integrated energy company. They plan to control the whole stack, developing the technology, building the plants, and operating them themselves. Their goal is to sell stable power, both electricity and heat, through long-term agreements. The technology is cutting edge. Oklo is developing advanced microreactors, which they call powerhouses. These are fast fission reactors modeled after an experimental design known for being incredibly safe. They're engineered to automatically shut down safely even during the worst emergencies. The game changer is the fuel strategy. Oklo plans to use nuclear waste as fuel. Right now, almost 95% of current nuclear fuel isn't split for energy. By reusing this material, Oklo could completely change the economics of nuclear energy while dealing with a major waste problem. To execute this vision, Oklo has huge expansion plans in the U.S. They plan to invest about $1.7 billion into an advanced fuel recycling facility in Oak Ridge, Tennessee. This massive project is expected to create about 800 jobs and would be the first private nuclear fuel recycling center in the nation. The company aims to get that facility up and running by the early 2030s. Oklo is also locking down essential partnerships with key players, including collaborations with companies like Vertiv and ABB. They're actively positioning themselves as a vital supplier of energy for those power-hungry data centers. Now, for the serious caution. Despite the incredible stock rally, Oklo is currently a pre-revenue company. They have not started generating meaningful sales yet. The company's financials reflect the cost of innovation. They recently reported a net loss of about $57 million. Their quarterly loss was around $25 million, and their operating cash flow was negative, losing about $18 million. Yet, the company's total value sits ridiculously high, fluctuating between about $14 billion and nearly $19 billion. This sky-high valuation is where the risk lives. Oklo's stock is trading at prices that already price in massive success that hasn't materialized yet. If you look at how expensive the stock is compared to the actual assets the company holds, the figure is extremely high, over 20. This is a massive valuation for a company that is still years away from turning a profit. Some analysts estimate that Oklo might not earn its first dollar of profit before 2030, if at all. The timeline is also long. The company's first power plant is not expected to start running until 2028. This timeline assumes they secure regulatory approvals without any major setbacks, which is a big assumption in the heavily regulated nuclear industry. The average price target analysts set for the stock is only around $71 to $73. This is significantly below where the stock has been trading recently, showing massive uncertainty. It's not all warnings, though. Oklo has built a strong balance sheet, which is vital because developing nuclear technology is hugely capital-intensive. The company holds over $730 million in total assets. Crucially, they have secured about $530 million in cash. They also boast minimal long-term debt. Their current ratio is an impressive figure of 71. This means they have a massive amount of short-term cash and assets available to cover all their immediate financial obligations, showing incredible liquidity. This financial fortress gives them the staying power needed to pursue these ambitious commercialization plans. Oklo is perfectly positioned to capitalize on the AI energy crunch, a problem only growing more urgent. The enthusiasm is real, driven by massive market demand and serious government support. But this stock is the textbook definition of a high-risk, high-potential scenario. Investors are betting that Oklo can navigate the extremely long timeline and the tough regulatory hurdles to turn its cash pile into actual recurring revenue. The market momentum is fascinating, but you must remember that this company is trading on future dreams, not current results. All right, that's the full breakdown on this high-flying, high-stakes nuclear energy play. If you found this analysis helpful for understanding this complex market, please hit that like button, subscribe so you don't miss our next breakdown on the fastest-moving stocks, and ring that bell icon to get notifications every time we drop new content. Thanks for tuning in, and I'll see you next time.